This video is provided strictly for informational and educational purposes only, and it is not intended as investment advice in any form. Always conduct your own thorough research and due diligence before making any financial decisions or investments. Gaining a deep understanding of historical market bubbles can provide crucial insights into the highly volatile and unpredictable world of finance, including the explosive and recent cryptocurrency markets we've seen today. Our historical journey begins in the 17th century Netherlands during the infamous tulip mania of the 1630s, widely recognized and often cited as the very first recorded speculative bubble in economic history. During this extraordinary period, rare and exotic tulip bulbs, such as the prized Semper Augustus variety, became objects of intense speculation and desire, with their prices soaring to truly astronomical and unsustainable levels unimaginable for a flower. Ordinary people went to extreme lengths, mortgaging their homes, trading land, and investing their entire life savings into tulip contracts, all fueled by the widespread belief that prices would continue rising indefinitely without end. However, the bubble burst dramatically in February 1637, causing prices to plummet overnight, leading to widespread financial ruin, bankruptcies, and prolonged economic chaos across Dutch society. Decades later, in the late 1990s, the world experienced a new kind of speculative frenzy known as the dot-com bubble, driven by revolutionary internet technologies. Fueled by the boundless promise and hype surrounding the emerging internet revolution, investors poured billions into any technology startup, often those with unproven, minimal, or even non-existent business models and revenues. The Nasdaq Composite Index soared to unprecedented heights, peaking over 5,000 points, as countless dot-com companies with little more than a basic website were absurdly valued in the billions of dollars. The bubble finally peaked in March 2000, followed by a brutal and prolonged crash through 2002 that obliterated over 75% of the Nasdaq's value, causing many internet companies to vanish entirely and trillions in market capitalization to evaporate. Fast forward to 2017, when the world witnessed the first major cryptocurrency boom and subsequent bust, marking crypto's entry into mainstream speculative frenzy. Bitcoin, the pioneering and flagship cryptocurrency, experienced a meteoric surge from under $1,000 at the start of the year to nearly $20,000 by December, drawing massive global attention. This explosive period also saw an unprecedented explosion of initial coin offerings, or ICOs, where hundreds of new crypto projects raised billions in vast sums of money, with virtually no regulation or oversight. Tragically, many of these hyped ICO projects utterly lacked any fundamental value, product, or viability, relying almost entirely on rampant speculative interest, social media hype, and unbridled greed. The inevitable bubble burst in early 2018, triggering a devastating 80% drop across the entire crypto market and ushering in a prolonged, harsh crypto winter that lasted for years. Remarkably, just a few years later in 2021, another unprecedented crypto mania erupted, this time driven by the explosive rise of NFTs, innovative DeFi protocols, and absurdly popular meme coins. Non-fungible tokens, or NFTs, exploded in popularity like wildfire, with unique digital art pieces, collectibles, and even memes selling for tens of millions of dollars at auctions. Decentralized finance, known as DeFi, promised and delivered a revolutionary new era of borderless financial services, lending, borrowing, and trading entirely without traditional banks or intermediaries. Even meme coins, often created purely as internet jokes like Dogecoin, saw their market capitalization skyrocket to tens of billions, attracting a massive new wave of excited retail investors chasing viral trends. The total cryptocurrency market capitalization peaked at an astonishing over $3 trillion, supercharged by ultra-loose monetary policies, retail FOMO, and relentless social media engagement across platforms. Yet, in 2022, reality struck again with another significant and painful downturn, as high-profile projects like Terra Luna collapsed spectacularly, wiping out tens of billions in value overnight. From the ancient tulip mania to the cutting-edge modern crypto bubbles, strikingly similar patterns emerge time and again in every speculative mania throughout history. These recurring hallmarks include intense media hype, overwhelming fear of missing out or FOMO, and rampant irrational speculation, frequently completely detached from any real intrinsic value or fundamentals. A critical and timeless lesson from all these bubbles is the absolute importance of thorough personal research, commonly known in crypto circles as do your own research or DYWAR. For any investment, truly understanding the underlying technology, practical real-world use cases, team credibility, and all associated risks is absolutely paramount to avoiding disaster. Diversification remains another proven key strategy, wisely spreading investments across a variety of different uncorrelated assets to effectively mitigate and manage overall portfolio risk. Always strive to avoid impulsive emotional decisions driven by euphoric market highs or sheer panic during crashes, and instead adhere strictly to a disciplined, well-thought-out long-term investment plan. Remember, market cycles of booms and busts are not only inevitable, but predictable from history, and studying these patterns can empower you to better navigate future volatility with confidence. This video is strictly for informational and educational purposes only and does not constitute any form of investment advice whatsoever. Always prioritize doing your own comprehensive research. Thank you sincerely for watching and for staying informed and educated about the captivating, cautionary history of the biggest financial bubbles from tulip mania to modern crypto eras.
If you want more crypto updates, market analysis, and breaking news, hit the subscribe button and turn on notifications.